Everyone, I just want to quickly touch on one of the companies that I own in the Canadian side of my dividend portfolio, and that is Telus, ticker symbol T on the TSX. Now, anyone who has owned this company over the past year to 2 years is aware how poorly it's done. Not really of its own doing, but because of the economic crisis, in quotations, that we are currently in. On the screen here, I have the year-to-date chart. My average price for my holding is around $27, and as you can see, it's had a rough year. I've been saying that this is a very good value around the 24 and under valuation even, which it's been on a big up streak since the bottom that was around $20 a share, which I thought was ridiculously a good price to pick this company up at. But now it's back up to 23. I still think it's a fair value. I know a lot of people have been asking me about this company, if they should buy it or not. My answer has been, if you need a good telecom dividend pair in your Canadian portfolio, this is the one I would take. It's a lot better than BCE. It's a lot better than Rogers. And honestly, I don't really like the American telecom players. There's just too much competition on that side of the border. If we take a look at a 1 month chart here, you're going to see that it's going nowhere but up. Okay, so it's not because of earnings or anything like that. It's just because we've had 2 Bank of Canada interest rate reductions. Okay, so 0.25 twice. Anyone who's an investor knows that right now. And the reason it continues to go up is because the general consensus is that the Bank of Canada will have to cut more. And this would really help the entire telecom sector, to be honest with you, because, Telus isn't unique in the fact that they have so much debt and so much capital expenditures. They just reiterated that they're going to spend another $5 billion on CapEx, which is an insane amount of money, but this is kind of the business that they're in. You're always upgrading 3G, 4G, 5G, whatever, towers, new fiber optic internet. Everything's always the newer, latest, greatest technology. Yes, they can charge the customers more for that, but it takes a while to get their initial CapEx investment back. Now, Telus did have Q2 earnings. It just came out today. I took a quick look at it. To be honest with you guys, this is not very exciting. It's a decent to good earnings report. This is kind of what I expected. They're getting more wireless customers because our population in this country, Canada, is ever increasing. And it's going to do so for the near future. So take a look at their investor relations page, and you can find the Q2 highlights. Like I said, not very exciting. Everything is on the up and up, though, and management sounds exciting, just like every other investor report I've ever read in my life. So in my opinion, this is a good company to hold for the near future. I like it here. I liked it even in a higher price. It's up to you guys. I'm not saying to go and buy it. I just like it for myself. Now, there's one possible problem with the telecom sector in general, and this is just speculation. This is just my opinion. However, if the next government happens to be a conservative government in this country, which it does look like it's going to happen, they may want to open up the telecom industry to the Americans. There was talks of the Americans coming in last time there was a conservative government, and it could happen again. You could see a Verizon or an AT&T coming into Canada, and frankly, that would destroy these companies. We cannot compete with American telecom, not even close. They're much better. They're willing to take on way more debt. They have much more money. So that would be a very scary reality. I would think about selling my holding if that were to be the case and if it were to come to fruition. But that's the only big problem that I see in this company's future. All right, guys, let's see you in the next video. Thanks.